Hey everyone. Today's drop features Eren, co-founder of Wasabi, a leverage trading app with native yield. Welcome, Eren. It's great to have you on board on the podcast. As you know, these podcasts are short, 15 minutes. We like to keep them concise and to the point. So I'll get straight in with some questions and let you take over on each question and go to town on how you best think the audience should get to know Wasabi, all right? So there are plenty of perps on the block. Wasabi certainly stands out, in part due to its concept and native yield. But how does Wasabi embody this concept?
Hey, thanks so much for having me. It's great to be here. That's a great question. So at Wasabi, we're much different from any perp exchange. All Wasabi's volume settles on chain, and we don't have an order book. We use on-chain liquidity to bring value back on chain, actually. And we do that through a margin backend. So our backend is not a perp instrument, it's a lending instrument. And through that, we're able to get deposits across majors, long tail assets such as meme coins and AI agents, and provide significant yield across a broad range of assets that we support. So through the lending backend, we're also able to provide really good yield on stablecoins or majors that you're trading against, that you use as your quote currency. So that's where the native yield comes from. Right now on ETH, we're providing around 6% APY. On USDC, we're providing over 11% APY. And then on Solana, it should be around 10% APY, just for being on Wasabi. Like you just get paid to be on Wasabi.
Those are some great yields, very attractive, and certainly ones that we'll be sharing. And obviously, you've got your TVL's growing. You at the moment, I think 32.4 million in TVL and an all-time high volume of 1.27 billion. Wasabi's seen great growth. Okay, where were you a year ago, and what has been the key driver of this adoption? Please don't just say bull market.
Yeah, that's another great question. The bull market definitely helps, right? Like every deposit that we have, if like rising tides lift all boats. So like our TVL increases with that. But apart from that, thanks to our unique backend, thanks to our unique margin backend, we're able to list assets very quickly. The trending assets that you see that are much lower market cap to be listed on centralized exchanges or perp exchanges, Wasabi is able to list them, and that's how we attract a lot of users. And through our native yield, which basically powers all the trades, users are getting a very competitive yield, right? Like as we bootstrap more and more trading by listing these longer tail assets, we get more users, increasing our open interest and providing higher yield, which creates a really nice loop where we get deposits on these native tokens, we increase our TVL, that unlocks leverage, and then more leverage trading reinforces token demand. We get more deposits, and it creates a really nice loop, a growth loop for both us and the communities that we support.
And your native yield is just quite exceptional, backing all of this as well. Look, Wasabi offers both leverage trading and yield generating vaults, as we've discussed, the very unique vaults, in fact. These two features, taking these two into account, how are you seeing your user base synergizing between them? Exactly how you envisage they would, or differently?
Yeah, that's another good question. So when we started building Wasabi 2 years ago, we realized it was right after the bull market, and we realized that there are two types of users that were still active on chain. One, yield seekers, the whales who have millions of dollars, who want to earn without impermanent loss, who basically want to become the house at the casino. And then you have the speculators, the gamblers, who just want to make 100x on their next trade. So we built Wasabi, we designed it in a way that it's like a two-sided marketplace to bring these two groups together, where on the one hand, you have the speculators who are trading with the house's money through our lending backend, through our liquidatable loans. This is very different from lending-based perps where you're trading against the house. On Wasabi, everyone is trading together, right? Like the house is actually giving leverage in the form of liquidatable loans to speculators, where the house is protected through liquidations. If ever their principal is about to go down, we liquidate the position, like Wasabi Protocol liquidates the positions, and the house is always made full, right? But on the other hand, the speculator can increase their size while they're getting into these positions by taking leverage. So it's two different user groups that we're catering to, that our vaults are catering to. But at the end of the day, we built a system where those two very unique user groups can benefit each other.
Yeah, I'm a big fan of building in the bear market. I think you have true users at that point and you've got great value. When did you actually start? Was it 2022 or 23?
At 23, we started with a different focus on NFTs. But back then, NFTs were the only and like the sexiest asset to be traded on chain. Like that's where
Yeah.
speculators were, and that's where all the volume was. And we thought, like we knew back then that everything was going to be tokenized in the form of NFTs or ERC20s. And we built Wasabi to provide that next step in the financial journey of an asset where, yes, you can swap them, you can trade them on the spot market, but what happens next, right? Like what happens when they get a little bit more mature? You need to earn on them, you need to be able to hedge yourself, and you need levered exposure.
Just looking through your vaults, okay, you're tackling a space we could call underrepresented, okay? On-chain leverage trading is what you're doing, but are you seeing unique challenges in this space now?
Yeah, like over the last year or two, we've seen a boom in the number of tokens that are launching, right? Like with the launch pads. So there are a lot of tokens emerging on chain. And the biggest, I think, our biggest IP lies in our risk management engine to basically identify tokens that we can support, that we can originate loans for, and the ones that we can't. So managing that risk has been a core focus and a key component of Wasabi's success. And over the past 2 years since we've been live with the current product, we've originated over $1.27 billion of volume, and we didn't have any issues. So I think that within itself speaks to the strength of our risk management.
So most DEXs require paired liquidity provision. Your website states deposit only the token you wish to earn on, no need for pairing with another asset. How does your single asset liquidity provision model work? And for those unaware of the hardships of liquidity provision, tell us what the benefits for users are compared to traditional LP models.
Yeah, so you have a couple different traditional LP models, right? Like the paired LP model kind of refers to AMMs for spot markets. So Wasabi does not have its own AMMs. We settle on outside AMMs. That's why we don't need double-sided deposits. On the other hand, certain perp markets, instead of getting deposits in pairs, they have a LP token, which is an index of multiple assets. That's also because they're kind of managing the spot market on their own market. But Wasabi's unique benefit is we settle on chain. We settle on the most liquid markets that exist on chain, such as like Aerodrome, Uniswap. We use Jupiter on Solana that like basically aggregates all the liquidity on chain. So Wasabi doesn't need double-sided liquidity or index tokens. What we need is individual assets for our lending vaults, for our earn vaults, to originate loans for traders trading with margin. So that's where our unique kind of mechanism comes into play and caters to that specific user who wants to be the house, who's long an asset, who has his or her own conviction on Solana, ETH, or a long tail asset such as Fartcoin, want to hold it long term and want to earn actual yield on it from speculators, they can come to us and they could deposit, they could earn in the asset that they deposit without any impermanent loss. One other thing to highlight there is that most protocols, when you look at their APY numbers, the number you see is not actually the yield you get in the token that you're depositing in. It's actually the number in addition, like that's provided to you with the token rewards or the point rewards that are coming from the protocol. On Wasabi, all the numbers you see are actually denominated in the token you deposit. So if we're saying you're earning 11% on USDC, you're earning 11% in USDC on your USDC that you deposit. But on top of that, we also have a points program, and that those points might be significant in the future.
That's nice. Yeah. The points programs are building. So do you know what your points program might be significant for in the future? Can you say yet?
I
Not
guess
yet.
like you just have to participate and see for yourself.
Nice one. All right. And for users who, or let's say for new users new to leverage trading on culture tokens, let's say, what advice would you give them about risk management? Do you usually, I mean, do the usual disclaimers apply?
Yeah, I mean, like trade at your own risk, right? Like I think leverage sounds very sexy. People love to get like X or like whatever is the max available leverage. But
Yeah.
I would definitely recommend looking at the chart, doing some technical analysis. Like there are some AI bots these days that would do the technical analysis for you, would tell you where it could drop. So like based on those levels, look at your liquidation price and make sure that you don't take too much leverage than you need to. Make sure to use take profit and stop loss orders if you're going to go to bed. So all of those are, I think, pretty important.
We've all been there, haven't we? Not setting your stop losses, right? So security as well. So security is a top concern in DeFi, and you're getting ahead by this by having audits performed by multiple entities, of course. Are there any noticeable aspects of your vault architecture and security that you feel spotlight the security in place for your users?
Yeah, so our vaults are using the 4626 standard on the EVM side, and then on the SVM side, we built the equivalent. So it's self-custody. We're not taking custody of anyone's assets. The vaults are there to only provide liquidatable loans to traders. The traders are basically like every loan that they take is over collateralized with their own down payment. So the trader experience is under collateralized, but the actual position itself is over collateralized, and our liquidation engine will make sure that the deposit amount that our LPs are putting into our vaults are always protected with liquidations and with our insurance fund.
Nice. Okay. Now back to the points, right? So you get points. Okay, users earn Wasabi points by participating within the Wasabi system. It's simple enough, right? A native reward system, which we all know. But your documentation mentions that Wasabi points may lead to something in the future. I know we discussed this. Is there a system there specifically to differentiate Wasabi from other perps, or is it simply a community tool?
We're actively like we always think the best way to bring value back to our community, especially to our early supporters. And we think points, like there have been multiple attempts of doing points. Most of the time they lead to the same thing. And we're thinking about like certain unique angles of doing things in a different way while providing our users, our community with the best in class rewards for being with us, for trusting in us, for supporting us early on. So that's where majority of the team's focus is. And although I won't be able to share more, I would like urge anyone, if you haven't participated in Wasabi, please do. I think you'll love what's coming out.
That's awesome. Thanks, Eren. Exciting. So we're just nearing the end, but DeFi is moving fast. There are new trends emerging every few months, from liquidity incentives to L2 scaling to tokenization. You know, I just heard yesterday a podcast with DeFi Dad and the Ethereum Community Foundation and the Burnt ETH. You know, it's like it's just something new multiple times a day. What current development in DeFi do you think will have the biggest impact in our ecosystem over the next year?
Yeah, I think as we got bigger and bigger on base ecosystem, I had the privilege to get myself familiarized with the AI agent ecosystem there. I think a lot of talent is building very interesting products on the AI agent side of crypto. I think there are a lot of chores in crypto that prevents retail users or like less sophisticated users to come in. I think all of that could be very well made so much easier for those like less technical users. So I definitely think AI agents such as yield optimizers, trading agents are going to be very, very important in the future. And I'm very optimistic about crypto having its own ChatGPT moment. Like, you won't have to go through white papers or like complicated user experiences anymore. You're just going to have a chatbot. It's going to find you the best yields. It's going to find you the best opportunities, the best investment opportunities, best leverage trading opportunities for your money.
Exactly. I mean, I totally agree with you, especially on the ChatGPT side of things. It's very interesting to see what's going to develop there, and there are quite a few people going for that right now. But look, I'll wrap up. We always have one question, a unique question at the very end for every protocol. Okay. This is, it's a bit of a game. What do you predict will be the total TVL of DeFi, as per DeFi Llama? New Year's Eve, bang on New Year. What do you think the total TVL of DeFi will be?
I think at least with the price action we're seeing, where the cycle is heading, where Bitcoin DeFi is heading, like when we think about Bitcoin, it's the most valuable asset crypto has, but there is no DeFi around it yet. But we're seeing a lot of chains, a lot of infrastructure being on that end. I would say at least twice by the year end, we'll see all of that Bitcoin flowing into Bitcoin DeFi. We're going to see a lot of price action on Solana and ETH towards the end of this like bull cycle. So my guess is at least twice, so at least 314 billion.
That's a nice big number, Aaron. Let's hope so. I think today it's what 154 billion. I think I haven't checked today, but yeah, well, let's hope so. So that's your prediction. It's going in the leaderboard. We're going to have a little chart, and we'll be producing that every week.
Am I gonna be winning some?
Yeah, we can Wasabi points maybe will be up for grabs. Look, Aaron, thanks so much for jumping on. I know you're strapped for time, but we'll wrap this one up. Yeah, I just want to thank you and thanks for sharing your insights on Wasabi and all the great work that you guys are doing. It's great to see all these different protocols moving forward so quickly. And at Portals, we love being at the middle of the sort of at that centerpiece where we get to list all these positions and strategies and opportunities on the Portals Explorer. Yeah, and I hope we get to work with you guys in the future. But once again, thank you so much for taking the time to share everything with our community.
Yeah, my pleasure. Thanks so much for having me and super excited for what we're cooking with Portal.